we'll go into gold real quick, and I just want to show y'all how beautiful trading is real quick. This is the trade we went over on Thursday. Again, I said about the entries. I said what gold was going to be doing at this level. This is exactly why clean and clutter-free is absolutely beautiful. But anyways, for anybody who is going to be coming into this, watching this, and didn't catch all the lives, so basically 1815 to 1822 is an extreme. A lot of people like to say the psychological level. It's a massive level based off higher time frames, and I'm going to dive in and show you why I say that, where I spotted this trade, and why I got into this trade. So real quick, I would just right click, and I'm going to remove all drawings. And as always, whether you guys appreciate this or not, I'm going to go through my strategy like I always will every single live, so that the newcomers come in or the experienced will see that consistency is key with trading. All right. So I'm going to go to the monthly time frame. And first thing I do is I scale out so I can see the price. And then I go to my candlesticks. I go to the line chart. And then I zoom in. Let me get this out of the way. I apologize. Zoom in a little bit. Now, I do not care about price way back when dinosaurs were on Earth, okay? I don't care about 2007. I don't care about 2004 unless current price action is in this area. Now, gold is at 1859. So for something, it'd have to be absolute just catastrophe for gold to dump to 374 area. So when you are marking up your charts, do not focus on something way back when to where you just completely clutter up your charts. I love clean and clutter-free. It has created consistency for me for 7 years now, and I highly suggest you do the same, especially if you're lost and you're always looking for that new YouTube video to show you how to trade or whatever it is. Listen to me. Clean and clutter-free. Remove the indicators, remove the moving averages, removing all the noise because the market's stressful enough. So clean and clutter-free again. Now, monthly, higher time frame. We're going to zoom in. You see current price action right here. I'm just going to go to my line chart. I'm going to look for the peaks of the line and the valleys. So just the highs and lows. I don't care about accuracy, so don't focus a lot of time on where you're putting it. Just, I see price, even back here. I'm going to put price right here, or the line right there. I'm going to put a line right here. Excuse me. And I will do another one right here. And realistically, for the monthly, now you can right click these. You can change the color. You can put text and say these are you can right click, go to settings. You could put, this is the monthly. I don't do all this just because I don't care. I know where my lines are based off the time frame. I always can just shoot back and forth and see where they're at that point in time. But just say, if you like to do that to remind yourself on key levels or like very important levels, like where gold is at now, you can do that. So monthly time frame, good. We have enough. We have basically the window showing us how and where current price action is. Excuse me. I'm having a holler, so I might have to cough a lot. I apologize. Going down to the weekly. Still see a pretty clear window on price. We could put maybe one right here on this and maybe one in the middle of here and just maybe one there. And then that's great for the weekly. You can change your colors if you like to change, what time frames, and you can color code that, stuff like that. I apologize. Let me just take a drink. That way you can distinguish what time frames are what. Down to the daily. And as you can see, we've got a pretty good story on where price has been, how it's moving, what it's flowing. We already, based off the higher time frame, we know our uptrend based off our lows to highs. Now, probably for the past 3 years, you can see gold's just playing in this massive range on the higher time frame. Not saying on lower time frame it's been ranging back and forth, but you can see price is just stuck between these levels. So daily looks pretty good. I'm going to go down to the 4 hour. And I don't see, maybe, just because we have this area here, I'm going to put that line there. All right, that's it. I'm done basically marking up my charts. Now, what you can do is just to help you out based off like the trend lines. Again, don't focus on complete accuracy. Like, don't focus on wicks and bodies and all that craziness, because all you're going to do is completely just stress your brain, and you don't need to do that. Just, I could put a trend line here. Basically, this was our bullish trend line, and then let's find a bearish trend line based off current price action, and boom. It's literally that simple. We don't want to go craziness, and like, you don't want to go all the way, put trend lines on your daily and weekly and stuff like that, because it's just not realistic. You see how immediately prices, or my trend lines, way off of there. So then you're going to start doing this mess right here. You're going to try to find better accuracy and stuff like that. And then when you go down to the smaller time frame, you're not even going to be able to identify that trend line. So you do that based on how you want to do it, if whatever helps you in trading. And I'll have that suggestion on anything. Like, if you enjoy moving averages, if you enjoy Fibonacci and it works for you, and you've got a consistent strategy and plan, that's perfectly fine. You've created a system that works for you. That's perfect. But for long-term consistency, I can almost assure you it won't, because indicators lag. Fibonacci's lag, moving averages lag, the divergence, anything and everything you want to use to create that or paint that picture, it's never going to have precision. It's just, you're trying to give yourself better confirmations on why you're getting into the trade. You don't want to care about that. You want to find your zones. You want to find your entries. You've already got your target set, have your stop loss in play, and that's how you want to do your trading. You don't want to say, all right, I've got 7 confirmations for the trade, because it doesn't exist. I never go into a trade saying I have 8 confirmations, because it doesn't exist. I'm just telling myself, all right, instead of a sell, this is a buy, because we have a double bottom here, and it's 31.8 on the Fibonacci, and we got divergence on the moving averages, and all this nonsense, when based off current price action, it's nowhere near it. We're going off historical data. So do not do that. All right, now let me go ahead and switch back from the line chart to the candles. And you're going to see how my lines play out. The zones, your support and resistance, whatever you want to call it, how they play out. And you've seen, literally, it took me 5 minutes. I didn't go, again, over the wicks and bodies, none of that craziness. And look how it plays out. This is why I can do this every single live. Even if you guys were with me in Imperial before I ever even any of this existed, you know this is exactly how I've taught. This is exactly how I trade. Nothing has changed in the last 5 years, because it's consistent and it's worked for me. So, and you see, I mean, there's no special secrets. It's just, you put your lines, and then we'll go into how to identify what trade we're going to be taking for that. All right. So again, and I apologize, I was excited to have this live, so I might be talking 90 mile an hour to y'all. But anyways, we have our levels. We have our trend line. Now let me go and explain to you what I like to call the heart line, which is basically in between my zones. The heart line is just like the, I don't remember what you call it, but when they're in the hospital, you got the heart monitor on, you know, it's just back and forth. You can't really tell. It's just a consistent rhythm, but it's up and down, left and right. You don't know what it's going to do. The heart line is for me as a swing trader, where I do not take trades. As a scalper and intraday trader, this is where you would like to take trades, because most of the time, if you've missed the entries off the zones, you can about guesstimate or take an educated guess on based off the heart line. So if we have a heart line right here in this area, and I didn't look, I don't even know, we haven't even zoomed in on current price action. I just seen it was right there. There's no precision. It's just in the middle of these zones. Just always try to keep it in the middle of the zones. You can move it around, adjust it however you want. It's just, for swing trading, I don't take the entries here. So if you're an intraday trader, obviously, anybody, even if you're just now starting out on trading, based off our heartline zone, you can see price broke out. You have this nice bullish candle, come back, retested. What my favorite on every strategy I almost take on any trade are break, hook, and go, which is basically a break up high or a break to the low, comes back, retest, and then price goes. Doesn't work out every time, and that's all right. We're going to have losses. I have losses all the time. You're going to experience it, guaranteed. But this is probably the most beautiful, simplistic strategy you can ever use with trading. Just it's a simple break, hook, and go based off levels. And you have this consolidation sideways. It breaks. Price comes back, retests. This once resistance is now support, and then price continues to the next zone. Doesn't mean that it's going to. This is why, as a swing trader, I don't like to take trades off of the heartline, because what price can do is price can come up here, play around, and then just slaughter right through that zone. So me as a swing trader, I look for, based off what price is doing, buys or sells at each zone. So down here, we already explained why I was looking for buys. I seen price was consolidating, moving sideways, but also, excuse me, this area was a massive level. And I forgot to mention this. Let's go back and see. Let me explain to you why. So 1822.901. Now again, current price action. I'm only explaining this based off where price is now. But when price was at this area, I think it was Wednesday or maybe Tuesday of last week, price was reaching this area. Look to the left all the way back to 2020. And I want to say, yeah, all the way back to 2011, 2013. You see this is a massive rejection zone. So you see price come all the way up here, wicked, then again came back down and respected this area. So the 1822, for whatever reason, if that's some type of trade barter price between the United States and other countries, nobody knows. There's a lot of fundamentals that goes into price with currencies. So whatever this level is, it's something significant. And that is why I said when price was reaching this area, 9 times out of 10, it's going to do, it's a one or the other. It's either going to blast through it or it's going to respect it. And as you can see, we respected it perfectly. It had basically perfect textbook rejection. That's off the monthly now. Going down the weekly, you can see it's a lot better picture all the way down to the 4-hour. And you see it had beautiful rejection. Price moved sideways. I told y'all, if you look for entries at these areas, you always want to have that clear indication. This area right here is not clear indication. You've got price up and down, up and down, up and down. We have no idea what price is going to do. This massive candle right here, that's your ticket. Not that you want to, not that you might miss price at that point, but when you're watching at these levels, you automatically can put in, if you're looking for a long, you can say, okay, if price breaks above again and closes, and we're only at 4 hours, so we can dive into this on a lower time frame. Excuse me. I'm just gonna put that there for me, and this is just going over my strategy. 40 pip stop, 9 times out of 10, 300 to 500 pip gain. That's my risk to reward on almost every single trade I always take. Sometimes it can take 4 hours. Sometimes it can take 4 weeks. I'm a swing trader. A swing trader consists of days and weeks, not minutes and hours. Minutes and hours is an intraday. Minutes alone is basically scalper. You're just in it for a quick profit, in and out, and you're done. Swing trading, that is, to me, it kind of removed a lot of the anxiety and the emotion out of trading for me, because as you all know, if you're just starting out or if you're experienced, you know that when you've got running trades, it's human nature. I trade only on my phone. Like, I do not use computers to trade. That's just me personally. I would not recommend that, but I'm just explaining to you my story. I was pulling my phone out every 5 seconds. You see, like, I go through cases every other week, because still to this day, if I'm answering Instagram or check trades, this, another, always pulling the phone out. But when you're in a trade, it creates chaos, especially if you're in drawdown or if you're in a positive range trade and you're up 80 to 100 pips and then price is rejecting against you. You're panicking. You're back and forth on your phone, looking at the computer. Just don't do it. That's why I enjoy swing trading. I take my trade, I put my final TP, and I let it ride. It doesn't always win. That's okay. But 9 times out of 10, it's going to play out. All right, so let's go down to the smaller time frame. And people always ask, do you do the top-down analysis? top-down analysis, whatever you want to call it. The lower the time frame, the more clutter. But 5 minute to 30 minute is where you kind of get the best story. Higher time frame, you can see your levels on what the range of the price is going to do, what direction it's going in, like your trend and stuff like that. 5 to 30 minutes gives you just the better story. That's about the best way to put that. You can see now this is the 1 hour time frame. Look what gold did. This is insanity. This will create blown accounts right here because, I'm going to buy, boom, sell, boom, 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 boom. This is why I said, remember, always wait for this clear. You can look at all this and then look at how clear this is. This is where patience comes into play. That's the number one key thing to trading, regardless of risk. Anything like that is knowing when to trade and when not to trade. Knowing when to sit on your hands and wait for the setup instead of forcing a trade. The worst thing you can do for trading, especially if you're with a Surge Trader account or any personal account, any other prop firm, doesn't matter. You're rushing your trades. You guys message me on Instagram, and as always, the first thing I ask for is the history of your trading. Like, just show me the last 2 weeks, and I see you guys are taking like 70 trades a day, which is mind blowing. Like, my mind can't even fathom that. I would be on medication if I was taking that many trades a day. I can't handle that. And I know you can't either, because that's why you're messaging me, because you're not consistent and you're trying to look for profit. So number one, stop trading so much. 1 to 2 trades max a day. Number 2, scaling down on your hopes and dreams of profit. Like a lot of you guys are trying to aim for 20 grand to 100,000 because you follow these fools on Instagram. Stop doing that. You watch my stories. I say this every other day. Stop listening to people say you can make 500 grand a day when they're trading demo accounts. Stop doing that. I didn't get on here to rant. I just want y'all, we're just going over that. Patience, and stop with the reach for the stars mentality. Like, I'm going to be a millionaire overnight, because that's not how it works. And that's the quickest way to blown accounts. So anyways, lower time frame, 15 minutes. Still, my throat is killing me, y'all. I apologize. Best fuel for a trader, by the way. From me, Ghost Energy drinks, absolutely love them. All right, lower time frame, 15 minutes. You can see how price was back and forth, sideways, consolidated, whatever you want to say. And a lot, even right here, I remember when price was doing this, I was talking to Corey inside here. And I said, price might break through this area and we might dump into sales. But we were waiting. I wasn't taking any trades. I think I took 2 trades last week, because this is how the market does sometimes. And I know, like, it does suck, especially I love trading. It's something you've got to understand. Like, are you going to risk? Are you willing to blow your account? Are you willing to, especially if you just passed like the audition for Surge Trader and you're super excited, but the market's crap, so you force a trade. You got to be careful with that. I can't teach patience. That's just something you've got to experience on your own. So please just listen to me and say, calm down, go over it, like chart up, do whatever you got to do. Patience. Okay, so going through all the way to this point, remember the strategy I said, break, hook, and go. Price comes up, does our little trap where the buyers were in. I guarantee 9 times out of 10, most traders, if including me, take the buy right here. As soon as we get up like 20 or 30 pips, the first thing we love to do is move our stops to protect our entry. Gold knows this. The market absolutely loves people like that, because what happens? Our entry's here, price comes up, and then boom, right where we literally, because the famous is right above entry. Like, just move your stop right above entry to protect your trade. That is good. That's not bad advice, but the market knows this. So what happens is price knocks your stop and then blast off. And then what you'll do is you'll re-enter on a pullback. Price will come down against you and you're in drawdown, and then you'll close the trade. And that's where just the emotions are flying, all that stuff. So I understand that's a very hard thing to overcome. For me, I like to move my stops once I'm at least up like maybe 80 to 100 pips. That's hard. That takes time. That takes a lot of experience in trades. Excuse me. But it's a very good thing to put into your trading, because if say you were in this trade right here at 18.23 and price goes up 20 pips and you move your stop, it's a guarantee. Like even the spread will knock your stop out. So just practice around with that. Even if it takes, just practice a few weeks on a demo on what you feel is the best time to start moving your stop. 9 times out of 10, right here, price came up, boom, knocked out, and then look, you would have been 80 to 100 pips, 300 pips in profit. All right. So we have our break, hook, and go. I am not good with this little drawing tool. Oh, okay, it worked that time, but that's it right there. That is the golden strategy, and there's nothing to it. There's no secret. It's just price breaks through the level, comes back and retests, and then gives the go. The pending buy orders come in, the bulls come in and just slaughter the bears, and that's what happens. You have this nice little. Oh, I'm sorry. And this, I hope you guys understand. Break, hook, go. It's perfect. Bing, bing. All right. Now, let's explain. Oh, okay. Price just decided to disappear. For gold, talking to swing traders, any type of trader, anybody who's listening on this, on where I do my targets. I was already looking for the swing trade to the upside around 1950. I always look for, if price is at these levels, I look for a retest of previous zones. So on the higher time frame, those previous zones are, we can just do this massive box right here. I'll delete this, but let's just do this right here. So this is what I'm looking for, like these type of trades. Now, obviously, it's not realistic. Like it'd be very hard to catch these, or price breaks out, does that stuff. But those are the type of trades I look for and what I wait for in between these zones. Not necessarily these massive swings, but from levels. So if price was to come down here, I'm looking for, I'm looking for price to at least go back to the previous zone and retest that high. If price breaks these zones, I'm looking for it to retest these lows. So that's how I identify my targets. That's super simple. We're based off current price action. What's the previous price point? We're at 18.23. Previous price point is 19.40. So there's my target. You already see gold is playing perfectly. I'm going to leave this for Thursday. We'll come back and check this out. And that is how I identify my targets. Guys, I don't want to take up a lot of y'all's time. It's been a little bit, and I just want to say I appreciate everything. I hope you guys can come back. I know a lot of y'all messaging me. Oh, I'm at work. I missed the lives. They're recorded. Go to YouTube. Subscribe to the Surge Traders channel. It's that simple. I love y'all, and I will see y'all Thursday.